So with that, we just want to start with a small land acknowledgement today. So Financial Resilience Institute's headquartered in Vancouver, British Columbia, where we are grateful to work, live, and learn on the traditional territories of the Coast Salish people, including the territories of the Musqueam, Squamish, and Tsleil-Waututh nations. We acknowledge Indigenous peoples as the stewards of this land, and I recognize that our work is carried out across the traditional territories of the First Nations, Inuit, and Métis people. This grounds our ongoing journey toward a path of truth and reconciliation with our Indigenous neighbors, clients, partners, and stakeholders now and in the future.
Thank you very much, everyone, for joining. My name is Eloise Duncan. I'm the CEO and founder of Financial Resilience Institute. We're thrilled to have you today for the webinar. And I just would like to recognize Cooperators, who's our founding impact funder. Very grateful for their support for all of our work. And in particular, today, I'd like to recognize and thank Coast Capital Savings Credit Union. Coast Capital is a very close partner of ours and the lead sponsor of this report sharing as well and webinar today, and they're joining us. So thank you for your time. Just a little bit about our not-for-profit. So we are based in Vancouver, Canada. We're a leading independent authority on financial health and financial resilience and financial well-being in Canada, but also globally. We do a lot of work to catalyze positive change, and we're very focused on the criticality of supporting small businesses as critical engines and drivers of our economies. With this study very much building on the India Small Business Financial Health and Resilience study that we conducted in India last year, and on our financial well-being framework for businesses as well, which was published last year. Next slide. So helping small businesses to thrive and prosper is absolutely critical. They're clearly the backbone of our economy. Sam is going to speak to this a little bit as well from Coast Capital. And why we conducted this work, and we're leading work in this area, is that there are significant gaps remain in terms of understanding small businesses, challenges and gaps, specifically as it relates to their business financial health and resilience. And we'll define that in a little bit. But this is really more important than ever, given the shocks and stressors impacting small businesses around the world, from the pandemic to economic challenges, as well as planned and unplanned business events that can impact them. And this work is very, very critical because not only are small businesses key employers within Canada, but there is a real intersection here with the financial health and resilience of communities as well. So I'll hand over now to Sam Herskovich from Coast Capital, who's going to say a few words. And thank you, Coast, for your support.
And thank you, Eloise, for the great partnership. It's great to be here. I'm honestly incredibly proud to not just represent Coast, but also the partnership that we've had with Eloise and the Financial Resilience Institute over the past few years. For those of you that don't know, Coast Capital is one of only 4 federally regulated credit unions in Canada. And that gives us a real responsibility to not only understand the drivers of financial health and resilience for our members, but to try to impact that through scale and really looking at how we do that across the country, finding real systemic solutions to improving resilience. And, I think since 2020, the insights from the Financial Resilience Index work that Eloise and team have done has been so valuable for us in terms of not just understanding the resilience of our members, but also what are the drivers of that resilience? How can we influence those drivers and continue to drive innovation in the Canadian credit union space? So we're really honored to have been a part of that work, and also, really the release of this report, which is the next step in supporting small businesses, business owners, and also the employees that they employ in supporting their financial resilience. As Eloise mentioned, small and medium-sized businesses are incredibly important to us. And I say the collective us, because they are actually about 98% of all businesses in Canada. And they also employ over 60% of the Canadian workforce. So they are a critical backbone to the health of our economy, the health of our society, and supporting their financial resilience is a significant opportunity to create impact. Um, there's a lot of challenges for small and medium-sized businesses. That has been true for a very long time. However, in the past few years, I would say that has ramped up significantly. Um, there's significantly higher costs to deal with. There's real supply chain issues. There's challenges in accessing skilled workers and retaining them. There's a huge amount of uncertainty around international policy these days. And then there's AI, you layer on top of that. How does that impact how consumers make choices? How do business owners use it to improve the efficiency of their business? It's an enormous amount of complexity, and we have a real opportunity to support businesses through that. Just last year, we introduced a new solution called the Business Money Builder, which is exactly that. It's meant to be a solution to improve the resilience of our business members, looking at what are their financial needs, what are their goals, how do we support that through advice, how do we provide practical tools and products to actually help them achieve those goals and improve their ability to weather challenges and grow their business over time. So we're on this journey together. We're excited for the insights that Eloise will share today. We're very proud and honored to continue to work alongside you, Eloise, and spotlight financial health in Canada. So on behalf of Coast, really looking forward to the ideas that might be inspired today and really hoping to continue the conversation over many years. So appreciate it, and I'll pass it back to you, Eloise.
I think the one other thing that I'd just like to add is that the thrust of this work is also around not just supporting businesses overall and those that are underserved, but we also have a real lens on the importance of supporting women-led, women-owned businesses, which is really critical to catalyze positive change and advance equity and inclusion as well, both in Canada and in the world. So this report also goes into opportunities around that as well. And the India report is also on our website, and we can share that as well. With this study in Canada building on probably about 10 years of practice in terms of this area. So just a couple of grounding definitions as part of our framework. So this is our Institute's Business Financial Health and Resilience Framework, which is a sort of very powerful framework which was developed over a number of years and published and shared last year in the fall. At the bottom, so just a couple of definitions. So we define business financial health as those financial management practices, decisions, and behaviors that help the business to balance their needs of today with those of tomorrow, while generating net profits and or achieving their goals. So there's a very sort of behavioral lens to that. And within this study, we have many behavioral indicators related to business financial health. Business financial resilience is about the ability of a company or organization to endure unforeseen business challenges, economic downturns, and disruptive shocks and events while creating the capacity to pursue opportunities and achieve their goals. So it's all about getting through shocks, but also building that capacity over time through their business life cycle. And business owner financial wellness, which is slightly different, is about the business owner's emotional peace of mind in terms of how they're managing their business's finances specifically over the short, medium, and longer term. So we have a number of business financial wellness and business owner financial wellness indicators which are baked into this. We also look at things across the spectrum from daily financial management, cash flow management, all the way through to protection against the unexpected. We look at financial inclusion and access to help gaps facing businesses, and also, very importantly, what they think financial institutions specifically can do more or less or differently to help them on their path, and specifically to help them improve and maintain their business financial health and resilience. On the right-hand side, you'll see that we have a very holistic perspective around this. So we see huge opportunities for financial institutions and others to take a more holistic approach to supporting not only the business owner and the business, but their family, employees, and the wider communities in an intentional manner, which can lead to more integrated solutions, very much building on some of the great offerings and strengths that financial institutions already have and already offer to their clients. Next slide. So this study is an incredibly robust study. It's the first study of its kind conducted in Canada. It was designed and led by the Institute. It's an online study with 600 small businesses from a representative sample of the business population, with annual revenues between 250,000 and 5 million, primary and joint financial decision makers, with data weighted to represent the Canadian small business market based on the proportion of SMEs by FTE and by province as well. We've got a great sector great diversity of sectors represented. Startups, importantly, in business for less than 1 year are excluded, and we deliberately had a good sample size of women-owned, women-led businesses that are defined as a woman who owns a majority stake, so 51% or more in the business, which is a very clearly defined definition as per OECD in the We Finance Code. So the study was conducted in December. We did our analytics in January and February. And these are some of the top line findings. So the first most important thing is that this is highly relevant. So nearly 3/4 of small and medium-sized businesses reported that they want to better understand their business financial resilience and how they can improve it. This is a very, very important construct, and this is very important to them, not only for all businesses, but for women-led businesses and for businesses of all revenue sizes. Next slide. We also see that businesses also agree that financial institutions need to do more to help them to maintain or improve their business financial resilience specifically while achieving their goals. And this is an opportunity for financial institutions. It's not a net new thing. It's almost like an overlay, a new lens to helping to provide relevant product solutions and supports while meeting the needs of business owner clients. And what we see is that if you look on the right-hand side, women-led SMEs are particularly needing help, which is very interesting. So 1/4 of the SMEs said, I really, really need help in terms of this whole area, guidance and help. And women-led SMEs, so 42% of those folks were very, very, very adamant that they would love more support. So there's a lot of opportunity and a lot of need. Next slide. We also see, and now there is, I was just going to say, there is a detailed deep dive deck that's available, which we'll talk to at the end, which has additional data by revenue size for women-led SMEs, by sector and more, to complement the ecosystem report for financial institutions and others. In that report, we do have tracking of things by Tier 1 bank as well. But what we see at the top line level is that just over half, so 51% of small businesses rate their primary business bank highly for supporting their business financial resilience over the past year. So that's good. But there are opportunities for innovation. And again, we see only 45% of women-led businesses report that. So they are slightly underserved. Next slide. So there are many, many indicators within this study. This is a bit of a snapshot, but the ones in blue are example business financial health indicators. So for example, whether I have an effective system to accurately budget and manage the business's finances, for example. So we're going to share some of the top line insights on those. These stats are for SMEs overall based on the study. The indicators in blue, they're just example business financial resilience indicators, but they relate to things like financial capacity to pursue my business opportunities, which is an incredibly important one, change in the business's financial situation, etc. So those are some indicators within our framework. And then we have these business owner financial wellness indicators, which relate to aspects such as level of stress over current and future financial obligations, whether the business owner has estate planning in place, etc. Next slide. So just a few top line insights. So starting with business financial resilience and just grounding everyone again, that is about the ability of a company or organization to endure the shocks and the stressors. One of the most critical indicators that we have, and we are developing a business financial health and resilience index at the moment. So we have very, very proven stats around which indicators actually are most powerful in terms of terms of contribution to business financial resilience. This one is incredibly important. It's whether a business has sufficient working capital to manage their cash flow volatility. It's one of the most important. And what we see is that 66% of the small businesses do report that, which is good news. But again, you see on the right-hand side, women-led SMEs are lagging. Next slide. Another very important indicator is whether businesses report having sufficient financial capacity, defined as liquid cash or credit, to pursue opportunities. Again, here we see that 78% of the businesses agree or completely agree that they've got that, which is good. But again, big gaps for women. If you see that 64% compared to 78% of women of men-led SMEs. Next slide. These are just a few other business financial resilience indicators. So whether companies report they have sufficient business insurance to protect against the unexpected. Now, the Institute does a lot of work in this whole area of protection. It's a very overlooked an important contributor to financial resilience of people, but also to businesses. What we do see here is that 69% of the sample did report they have sufficient business insurance overall to protect against the unexpected. Now, remember, there's many different types of insurance from key man to other, and people can and businesses can sort of underestimate what they actually need. So there's significant opportunities for impact here for FIs. Also, as businesses report and experience unplanned sort of stressors as a result of climate change, which is something we're tracking as well with more data in the report. Business financial situation changing is a dynamic indicator, which is very powerful. We track that on the personal side as well. We see that just under half of the businesses report that their business financial situation that may be based on their revenues, demand for their services, etc., has improved in the past year. But again, these things go up and down, and it's very important that everyone knows that businesses' financial resilience can clearly change over time. So social capital is a very important aspect. Lots of FIs do a great job at connecting businesses to networks, to helping them find advisors and other organizations that can help them with their businesses beyond financing. We track this as a very critical indicator. We track it on the personal side as well. And we define business social capital as whether the business has business mentors or advisors that they can turn to, that they would be prepared to turn to when tough decisions need to be made. Now, these people can include accountants, lawyers, bankers, consultants, coaches. They can include many different sort of trusted advisors. But what's interesting is we see from the data that the women-led businesses are more likely to have social capital that they're prepared to turn to, which is fantastic. And financial institutions, again, can do more to help more women and other small businesses to tap into their social capital and access quality coaches and supports to help them with their decisions. Next slide. Now, this one is interesting. This is a non-traditional indicator which we have within the study, and it's really whether a business is able to retain employees during times of economic downturns, where they have a good track record at talent management. And we know that that's critical because talent is obviously absolutely critical to an organization's success often. Now, with the impact of AI, we're not actually including this as one of our index indicators, but we do see this as key to success. And good news was that 77% of those small businesses reported they do have a good track record in retaining employees during times of economic downturn, which is great. We similarly also are tracking whether these same organizations report they care about their employees' financial wellness, with lots of opportunities for impact there. And again, we're doing work in that space as well to help catalyze positive change there. These are a few interesting stats. Next slide. And there are many others within the study. But what we do see is that Not surprisingly, especially for smaller businesses with annual revenues under 1 million, is that the business and the personal finances are highly interconnected for these small business owners. And that's why this holistic framework that we've created is very relevant. That's why financial institutions need to think about how they can holistically and seamlessly support businesses and the business owner from a financial health and financial resilience perspective while making it easy, knowing that these people are incredibly time poor and they're focusing on their business all the time. Next slide. So, a few business financial health indicators. So, remember, those are the behavioral ones. And so we've tracking many in here. But good news, 92% of businesses report they're planning ahead financially for upcoming or unexpected expenses for their business. Sam mentioned the challenges of sort of higher costs and cost management in this high cost environment for businesses. That's certainly an issue. We see a lot of discipline around managing within operating expenses from our data, but we also see the need for institutions and small businesses to get more help in this area. Next slide. And we're tracking a lot of like more traditional indicators. So those would be some of the ones in these boxes, which bankers would be tracking and others would be tracking around, for example, whether clients are paying their business loan payments on time, whether they've got account receivables well managed, etc. But we are also tracking more sort of less traditional indicators around, for example, whether businesses not only have a business plan that they're sort of working with and monitoring against, but what components they have within that business plan, and whether they have, for example, break even or profitability analysis within that business plan or cash flow budgets within that plan. If they do, and if they're tracking against those on a regular basis, they're more likely to be financially resilient. Next slide. We're also tracking things like the behaviors. So whether business owners are regularly seeking out these financial management practices to improve their business's financial health and resilience. And we see a lot of proactivity here. We will see a lot of proactivity for women-led SMEs. Good news, nearly 70% of the businesses are setting prices strategically to try and optimize their margins. Still, a lot of them need help, and this is challenging. Next slide. Again, lots of really good business savvy. So we see that many of the businesses are really working to ensure they have well diversified revenue streams where possible. That they're ensuring good supply chain diversification. They're expanding to new sectors or markets, etc. We have to acknowledge that there are many different types of businesses within this sample size and just within the market. But from our data, we see a lot of proactivity, and I think this 47% of the sample reporting that they grew retained earnings by 10% or more last year. That's a real indication that this is this small business sort of set are really doing quite well. Next slide. That said, so there's lots of positive behaviors going on. There's lots of interest. There's lots of management of the business. We also see huge opportunity for financial institutions to do more. And we're tracking significant business financial inclusion and access to help gaps. So these are just a few snapshot example gaps with lots more in the detailed report. But we do see that, for example, in the last 12 to 24 months, just over half of the SMEs reported challenges in accessing working capital or lines of credit from their FI. More want financial health checkups and advisory. Nearly a quarter reported challenges in accessing wealth solutions. So these are just a few. We've got many more in the detailed report around things like term loans, wealth solutions, succession and exit planning, insurance, digital and account reconciliation tools, treasury and cash management, FX and cash cross-border solutions, etc. So tremendous opportunities for FIs to continue to try and meet the needs of their clients while helping them achieve their goals. Next slide. Women-led businesses, we could have a whole other webinar on this, to be honest. But what we see is a lot of discipline by the women-led SMEs. We know from many FIs that women-led SMEs can be the lowest risk, most valuable, and brand loyal clients if you serve them well. That's the traditional, lots of reports on the traditional data shows that. Our data also highlights that. And what we do see is that across some indicators, so for example, usage of digital technologies or payment platforms, or regularly seeking out financial management practices, women are actually really doing very well, and they're really performing very well and quite diligent. Next slide. That said, women are challenged across a number of different indicators and factors, and I'll speak to that in a bit. First, though, on the business owner financial wellness side, so this is that third pillar of the framework. One of the indicators here is level of stress over current and future financial obligations. You can see obviously resilience does not equal stress. And so, despite a lot of these businesses being financially resilient, they still have high levels of financial stress. It's very important to acknowledge that. And women led SMEs are much more likely to have high levels of financial stress, also more likely to be stressed about their levels of debt manageability and other things. Next slide. We also see from our data, this did not surprise me, but it's validating that overall women-owned SMEs report having lower levels of confidence in their business financial literacy. And that's defined as not only about my financial practices, but it's also what are the types of solutions I can access? How do I access them? How can I move forward? And so this really validates the power of continued or enhanced education tips, advice, or just confidence building through the account manager and other mechanisms to help boost the confidence and the financial literacy of women-led SMEs as an enabler of them adjusting their behaviors and seeking out the relevant solutions and support to move forward. It's not to say that all women are less confident, absolutely not. And similarly, there are male and other small businesses that need help in this regard. Next slide. I'd spoken about the debt manageability, so those numbers were quite stark. You can go to the next slide, Katie. Financial inclusion and access to help challenges, lots more on this in the paid report. But essentially, we see a number of gaps across many indicators, financing and otherwise, for women-led SMEs, as well as for SMEs overall. But this one was, I think, validating of other data. We see that 32% of women-led SMEs reported they've been challenged in terms of accessing small business financing over the last 2 years, compared to just 14% of their male counterparts. Now, clearly, many FIs are doing lots of work here to try and make their credit adjudication and other processes more inclusive and to deliberately target lending and the like for women-led SMEs, which is extraordinarily powerful to catalyze positive change. If there's one thing that will make a difference, it is that intentional support of women-led SMEs, in my view. But this data, it tells the story that these women-led SMEs need more. They also are more challenged in terms of growth financing and other solutions. Next slide. They're also unfortunately more likely to have reported challenges in accessing solutions specifically so they can maintain and improve their business financial health and resilience. So again, lots more need for support there. Next slide. And this is just a snapshot. There's more in the detailed report, but you can see if you look at specific example products and services, from financial health checkups to wealth solutions to insurance, more women-owned SMEs report that they've had challenges in accessing those over the last year compared to male-led SMEs. I do see, criticality of financial institutions doing more to help all SMEs in this regard, making it easy, and providing the right solutions at the right time. But women-led SMEs particularly need help. So in the ecosystem report, there is some data and insights around, based on what we have provided from a data perspective, some data and insights around opportunities for financial institutions to do more to help their small business clients to move forward. I would say two things on this. One is we don't have all the answers. A lot of the people on this call are the experts. They are supporting business owners day to day, and there are some tremendous offerings and solutions that are being offered by FIs in Canada and globally. So some of these opportunities are based on our data and based on what we see as being best practice, based on our work in other countries as well. So that's one thing I would say. The other thing I would say is this needs to be considered as a continuous journey, and the small business owners need to be included in the sort of co-creation or the enhancement process of product solutions and tools. But I'm just going to highlight a couple of opportunities. So number two, we do see real opportunities for FIs to appropriately nudge and support their small business clients to foster those healthy financial practices and behaviors and to access relevant solutions and support that specifically improve their business financial health and resilience. Now, the index that we're creating helps identify what some of those specific levers are, and I think there's lots of insight that can be garnered around the specific financial practices and behaviors that really make an impact. But that is something that I think FIs are already doing, but can absolutely be taken to the next level and communicated in a way that is relevant for the business in terms of their type of business, their life cycle, and also related to their goals. So it's not just those practices for the sake of the practices, but so that they can achieve their business goals. Number five and six, a little bit integrated, but we do see opportunities to embed financial health and financial resilience constructs and tips and tools and the like into both human and also digital advisory models and solutions. A lot of this does need to be provided digitally and from an omni-channel perspective. It can't all be provided through in-person support, but we see lots of opportunities there while also investing in new product and service innovation. And Coast mentioned its Business Money Builder as an example. Tools like that can really help people and businesses to move forward. Next slide. Yeah, so the financing capital growth financing piece, it's absolutely critical. But we see that obviously organizations like BDC, which are very, very focused on being a leader at supporting women-led businesses, they have an entrepreneurship loan for women, as well as for Indigenous and Black entrepreneurs. They provide courses and sort of entice organizations to foster healthy financial behaviors and be proactive. And as a result, you get slightly reduced interest rates on your loans, for example. So this is the sort of innovation that's needed. And I think being really targeted at helping entrepreneurs when and where they need help can be hugely powerful while integrating the financing with other solutions. Number nine, we do see the importance of bringing visibility to this. So the more visibility there can be in terms of linkages to KPIs and tracking for FIs for small businesses through existing tools and the like can be very, very powerful. RBC has a My Advisor for Business digital platform where you can get cash flow management insights, for example, benchmark data, and then you can get sort of tailored communication around how if the margins are going down, etc. These sorts of tools, they're not the silver bullet, but they can be a platform for change. And I think the financial resilience score tool and checklists and things as well that we're starting to develop can also be powerful as well. Number 11, expanding access to relevant commercial insurance and risk management solutions is hugely powerful. And then also number 12, helping businesses to leverage their business social capital, including networks, advisors, etc. So these are just a couple of examples, but there's more in the detailed report. And as I say, we look forward to continuing to partner with organizations to help them to co-create solutions that really make an impact for their clients and for stakeholders, and then importantly measure which interventions and which offerings make more of a difference over others. Next slide. So in this report, it's just important to know that many of these business owners are clearly also lending clients of the business bank, of their primary business bank. Next slide. They're also most of them are also personal clients. So this is just really important because FIs need to acknowledge, and they know that if you get it right for a business owner and their business, it's a highly profitable relationship. And so that there are multiple business benefits of this. We did track that for the India study, the business benefits of improved business financial resilience support for financial institutions in India. We didn't do that with this report, but we've got a lot of data around it, which we can share as appropriate. These are just a couple of examples, but I think FIs are doing a lot to provide really relevant support to women-led businesses, knowing that this isn't about providing net new practices specifically, but it is about providing relevant digital tools, empathetic business relationship managers, and really being quite intentional about supporting women-led SMEs as an important segment. But we see lots of opportunities here for businesses to do more and provide more targeted support for women-led SMEs, including through new or enhanced solutions that may relate to like business financial health checkups, inclusion of succession planning, integrated wealth solutions, and the like. So we're doing lots of work in this area. Expect more to come, but we're very committed to helping organizations to better support not only their small business clients overall, but those who are more underserved and women-led SMEs as well. Next slide. And then, yeah, this index is coming. So if you're interested in learning more, just get in touch with me. It's very, very close to being developed. It's going to be the first index of its kind in the world. We're really excited about it. And it will have application in Canada as well as for other markets. It measures a business's ability to get through financial challenges, stresses, or shocks while creating capacity to pursue opportunities. And it's an incredibly strong, incredibly robust model, which can be used by institutions. So we're sort of excited about that. Just on the right-hand side, we are starting to have some of our leading clients are also starting to use our instruments to also measure, report out on their impact through UNIP FI and through other leading organizations. So that's just a snapshot of Standard Chartered and how they're very committed to supporting women-led SMEs and SMEs globally, but how they're using our data to spotlight opportunities for them to do more in this space as well. So I think that's it. We're just going to open it up now for Q&A. And I'm very happy to also answer any clarifications that people may have.
Awesome. Yeah, and I will stop the screen share now in case anyone wants to come off of mute and turn your camera on too and
Yeah,
ask your question in person, make it a little bit more personal. But I think we do have a few questions from during the presentation
great.
in the chat.
Yeah.
Yeah,
And
thank
maybe
you.
other unrelated question. The index is I'm really interested in it. Will it be made public? Is it going to be part of the report? So how does that work in terms
Yeah,
of
yeah.
assessment
So
index?
great question as well. So let's have a chat about it. I think we're early days. I haven't yet decided if we're going to be making the actual indicators sort of transparent or publish
Hmm.
them for the ecosystem. We are very, very committed to catalyzing positive change through thought leadership. So I'm pretty
Hmm.
sure we are going to share what those indicators are.
Yeah.
But yeah, very happy to chat to you about that. And I think we're really excited about it because we do see the opportunity to help complement existing data and models for financial institutions and others to measure this and to measure slightly different outcomes. So yeah, very happy to discuss with you in more detail. But we've been through multiple model iterations, and it's an extremely strong model, which builds on both the Canada and the India data.
Hmm.
And very importantly, we've had consultations with IFC and like major organizations around it as well. So it's also been co-created with input from sort of leading financiers, as it were. But yeah, happy to discuss.
For sure, yeah. And if you want my 2 cents, I think if we want to foster change, for sure, make it open source, make it public. As more people have it available, it's the word is going to spread. And if
Yeah,
it's
yeah.
one the first of its kind, I think it's worth sharing for sure.
Thank you.
You're welcome.
Yay. And what organization are you from?
Me, I'm from Desjardins.
Oh,
So I was invited.
wonderful.
I think Jean-Yves, our boss, was invited, and then he forwarded the
Well,
invitation
that's
to us. Yeah.
wonderful. We'll have to connect. You guys do wonderful work. You do such
Thank you.
wonderful work,
Yeah,
and you're
for
such
sure.
a
I'll send you an email because I
yeah, you're
definitely want to
such a
follow up on that
leader
email.
in financial health. So, along with the credit unions and others. So, yeah, congratulations on all your leadership.
Thank you.
Amazing, thank you. We just have another question, Eloise. This one's just around, I believe, Erin, you're referring to the detailed report, but just if you can speak to the degree to which it provides insights at the geographic, industry, and size, e.g., revenue and employee size levels.
Yeah, yeah. So it varies by, we can talk offline if you're interested too. It varies by indicator to answer your question. We don't go into lots of sectoral analysis. We provide sprinklings of the sectoral analysis. We don't provide analysis by province, but we have got, just because the sample sizes are too squiffy. But there's a lot in there, and there's also a lot that relates to completely new and different things, including specifically on the business financing front, around insurance, and the like. So there's quite a lot of data which also slices some of those key indicators that I shared with you today by revenue size for women-led SMEs and more. And yeah, happy to discuss offline, but I think it's very much a complementary report that can help you target your impact, as it were. Okay.
Amazing, thank
I
you.
hope I answered the question.
And I just want to encourage if anyone has any other questions, you can pop them into the chat. We do have a couple that were sent through earlier. Um, so Eloise, what do you think could be one or two calls to action for financial institutions to do well in Canada supporting SMEs specifically?
Gosh, what a great question. I mean, again, I just want to recognize the wonderful work that's already happening in terms of financial institutions having, very solid and amazing, small business banking strategies, and doing as much as they can to support their clients. I think a call to action for me is definitely around thinking about this from this business financial health and resilience lens. Like that may be a strategy opportunity to start thinking about, okay, how can we infuse this business financial health and resilience lens into our perhaps slightly more traditional segment or small business strategy? So that's a call to action. I think being intentional about supporting women-led SMEs is critical. It really is critical. If there's one thing that you could do to better support businesses, and catalyze change, it could be supporting women-led businesses specifically. Our data also highlights that, not surprisingly, smaller businesses and those that are newer, that are less tenured, are much more challenged. So, there's lots of opportunity there for institutions to think about how they can support their new clients, but also younger and smaller businesses to do more. And then, yeah, product and service innovation. I mean, it really is all about building on your strengths. What other tools, offerings, advice, tips, and sort of solutions can you overlay or build into what you're offering to businesses to help them move along? And specifically to foster those healthy financial behaviors. And I mean, I've been a business owner before becoming the CEO of the Institute, a business owner for many, many years. And we don't always want to do it, and it's hard. And so it's about making it easy and then very importantly, connecting it to what's in it for me, linking it to the business goals, linking it to the financial goals, and then providing that support along the way. So, our data provides evidence that there's huge opportunities there. And then collaborative partnerships. So many FIs, they're not just incredible banks or credit unions in their own right, but they also have incredible connections to other partners, other suppliers. And there's an opportunity for financial institutions to partner with other organizations to help their business owners in ways that are value adding and that sort of also build resilience within the overall community. Two last plugs I would say is one, think about employee financial wellness as well and the value added offerings that can be provided there for business clients as appropriate. Two, where appropriate, think about integrated solutions. And that's, not just supporting me, but me, my family, my employees, and those I'm connected to. And four, measure your impact. Measure which interventions make more of a difference. And it doesn't have to be perfect, but, start getting clear and making trade-off decisions. And I think data is very important to help with that, as well as getting insights from your end clients because they know what they need as well. But I think to Kian's point, they don't always know. They know, but they don't always know. So it's being innovative at hearing for what they need as well. Rachel, Sam, I'm wondering if you two have any thoughts around calls to action or innovation opportunities, from the Coast perspective. We're all on this journey together, but what are your thoughts on that?
Sam, do you want to jump in or do you want me
Oh, you
to?
go first. You came off mute first. Go ahead, Rachel.
I think the measurement piece, Eloise, that you just mentioned is really important. I think having a lens to what is working and how that can help shift the innovations that you want to pursue and what you want to do that's going to have the most outsized impact for in our case, our members is really, critically important, as well as that piece around really designing with the end user in mind and
Yeah.
considering and engaging them to understand what would be the most meaningful intervention for us to step in with. I'm always fascinated by the social capital conversation and the number of folks who have an advisor or a mentor but would not, go to them. And so I think there's also a responsibility here for us to think from an innovation perspective, how do we create the space where people feel comfortable talking to advisors, mentors, to their FI around the things that are keeping them up at night? What are the ways that we create that safe space for
Yeah.
folks? Because I think that's critically important.
Yeah, I think that's great. Thank you. And your point is it's what financial health leaders are doing around the world, like the financial institutions around the world that are really serious about this. They're really getting clear on what are the levers they can pull, how can they pull those, and then how can they make trade-off decisions and basically be clear around which interventions actually drive the improved financial resilience outcomes and or the business benefits for the bank as well. So that is a journey, and I think your point around thinking of it as a journey and including the customer in that is really important. Yeah. Sam, anything there or from you or Kian from the
So many
Desjardins
thoughts,
perspective or anyone
Eloise.
else?
This is a wonderful conversation. I think as it relates to measurement, sometimes you can get stuck in trying to measure perfectly. And I think you highlighted earlier, just get started.
Just
I think
get it
sometimes
start. Yeah.
qualitative or directional is enough to know
Yeah.
that you're on the right path to doing something that matters to a customer or to a member. And, I think having to try to get fully quant study sort of base, supported causal relationship type of outcomes is very challenging because there's so many complex factors as to why someone's resilience might improve. So just knowing that you're on the right path, I think is good enough to get started. We can't get, from an innovation perspective, too worried about whether or not it's a perfect science. So I think that's important just to do something, test and learn, see what members say, ask them, is this helping you? How is it helping you? And maybe the other point I will make is when you do design innovations, finding the connection to what motivates someone to
Yeah,
improve their
exactly.
resilience is important. You could provide the most amazing solution that might be like the most impactful for someone. If they're not motivated to use it or to exhibit the behaviors that support that, then it's all great innovation, but it doesn't have the expected impact. So when you're designing solutions, thinking about how do I motivate someone to actually do what's in their best interest?
Yeah.
As an example, you wanted to build a cash buffer to weather some unexpected expenses. How do you, within the design of the product or the solution, provide some benefit for actually increasing your balance and keeping a balance so that it's in their best interest and it helps them? So
Yeah.
really, I think insightful insights from the initial report, Eloise, and a few things that I think would be helpful for all of us as we think about the next steps.
Thank you.
Awesome.
Kian or anyone else? Any other comments? Otherwise, I
Yeah,
think,
I'll
yeah,
react. Essentially, I don't have much to add to this angle of the conversation because I'm maybe not at the same level. But me, the insight that I was really gathering is like how to integrate that into our strategy. Because basically, I work in strategy for
yeah,
the business side of Desjardins, and we already have plans in place how to be more inclusive in terms of certain population. And when you see data like this, it really reinforces basically you cannot just take it by the side and be like, yeah, let's be more inclusive and just be general about it. You have to be
yeah,
very like what really rang a bell is being specific, intentional, and this is what fosters changes. So when we think of like, say, for example, every financial institution is evolving their omni-channel capabilities. Well, having that in mind for in terms of health and resilience is really helpful because then you don't just start things about products and servicing. You also think about the human angle and how to integrate that in terms of products. It's really interesting. So that's more on that end I was going.
yay.
Amazing.
Thank you.
I think
Yeah.
we are at time now. I just want to, knowing that everyone's very busy and has a lot to attend to, I just don't want to keep you on for longer. But if you want to continue the conversation, please feel free to do so. And just if anyone has to drop off really quickly, I will be sending out the presentation and the recording again, as well as I'll include like the links to the report and everything like that, just so that you have everything available. Thank you so much.
Thank you so much.
Awesome. Thank you guys. Thank you for the
Thank
presentation. It was
you. Take
wonderful.
care. Thank you.
Have a good one. Take
Thank
care.
you so much. Lovely to meet you. Excellent.